Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. In this video, we're going to talk about why the stock market always has an upward bias over time. And I'm going to kind of give you a couple of tips and tricks of what they do behind the scenes, why the market just always keeps going higher or making all-time highs over time. So, but first, make sure you check out the links down below and check out my Day Trading Fearless weekly S&P Emini future trade zones. Only $50 for a lifetime subscription, and also my free Discord chat room two for the S&P futures. But as always, let's jump right into this video. So why the stock market always has an upward bias, right? Why is the market always going higher? So here's a 15-minute chart, right? If we go out to a 1 year 90, a 2 year chart, right? Upward bias. Now, during those times, we will have pullbacks, okay? But let's go even farther. Let's go 3 years, right? Let's on the weekly, let's actually take this all the way down to the max available. Look at this, right? Just an upward bias, and this goes all the way back. Okay, back to like 83. Okay, 1983, we were at 143 on the S&P futures, right? Today we're at 46.97. Okay, and this is why is it that the market always goes up? Well, let's jump into that real quick right now and show you guys why. And that is not, here we go. So look at the Dow 30, okay? Dow Jones 30, right? This is 30 of the top US companies, okay? And look, you have Apple, Microsoft, Verizon, IBM, Cisco, Intel, Johnson & Johnson, UNH, Home Depot, JP Morgan, okay? Do you get the theme? These are all the biggest companies in the US, right? The kind of essentially the companies that run America that we use on a daily basis. Walmart, right? But with that, but what happens is over time, you start to see stocks that no longer are relevant. We'll take a couple stocks, ExxonMobil. They used to be in the Dow. They're no longer in the Dow, right? Years and years ago, used to be very oil heavy in the Dow, right? Exxon, Chevron, a few others. But now you have more technology, right? Apple, Microsoft are two of the biggest components, right? So what happens is when companies start to lag and no longer are relevant, they take them out and put the next best thing coming in, right? Let's take a look at the S&P 500. Okay, same exact thing. So what might happen, something like American Express, right? They're not a very big weight, but eventually what may happen one day is they might just say, hey, American Express, you're no longer relevant. Yes, you're a good business, you make money, all that, but we're going to replace you with the next big thing coming, right? And that next big thing is what's going to drive the market to have that upward bias, right? Over time. Look at, if you go and look at just what Apple has done to the market. Think about Apple 10 years ago. Even 15 years ago, they were barely relevant, right? Nobody cared about Apple. They almost literally went out of business. And then all of a sudden, Steve Jobs turned everything around, came out the iPhone, and even before that, the little music player, iPods or something. I forgot what they're called, but then Apple started to become relevant, and when it started to become really relevant, they put that in, and they probably took Kodak out because nobody was buying regular cameras. Kodak is irrelevant now. Remember, Kodak was one of the best companies out there. Xerox, right? These were the big bellwethers that just became dead money. Nobody wanted to trade, do things like that. So when we go back and we look at the overall markets, right? Just understand, we always say to ourselves, man, why does the stock market keep going up over and over and over? And that is one of the reasons, because what's happening is they take out the laggards, right? The ones, companies that used to be something and they're just nothing today. Nobody cares about them. Money doesn't flow into them for whatever reason. Maybe management has gone downhill, or they just they're just a safe company that really doesn't do anything. They're not in a kind of making new products. And I'll tell you one that I've been watching that I'm gonna be won't be surprised when it gets taken out, is the IBM. I look at the chart for IBM over the same exact time, right? IBM is going the wrong way, right? Is the market's going from left to right, up the screen. IBM's going from left to right, but to the bottom of the screen. Eventually, they'll be taken out, they'll be devalued, and they'll put something else in, which is the new best thing. And that's why the market will keep going higher over the long term. And that's why they say to always buy and hold, right? The markets will always recover and be better than they were before. And that's one of the reasons, right? They're always changing who goes into the Dow, the Nasdaq, the S&P 500, things like that. So the reason I made this video was so you guys are able to really kind of understand why you kind of always want to play from the long side. Now, if you're day trading, swing trading, hey, for earnings, couple things, I get that. But if you're a buy and hold, like, hey, let me buy something for the next 5 years, 10 years, right? Let me buy the SPY, right? Because as they keep rotating the bad companies out with the good companies, you're just going to keep on seeing an upward bias. Now, are you going to have dips like this? Of course, right? But when those dips recover, you'll start to make all-time highs. We've done that since 1932, right? Or even farther than that. But if you look at, hey, we had the Great Depression, prices sold off, things like that. So don't be afraid if you're in this market for the long haul. If you're in your mid 30s, 40s, even 20s, just buy the indexes and just dollar cost average. And then when the dips do happen, start to load up on it, because you know the powers to be who control the markets, meaning, hey, let's put the next big company in there, is just the sheer action of it is going to drive it higher. And you could see that in the NASDAQ too right now. If we go over and we look at the NASDAQ, okay, look at the companies they're pretty much in the NASDAQ. It's just all the tech companies, right? Now, that's what the NASDAQ is, but it's one of those things where eventually Comcast, right? Comcast will probably get booted one day and replaced with something else, because they are they're just dead money. They're nothing. I'm surprised Sirius XM is even still in it. Kind of get Sirius out and put somebody else in. But one of the 5 biggest companies, Microsoft, Apple, Google, Facebook, Tesla, Amazon, Nvidia, those just are like 50% of the entire NASDAQ itself, right? On the weighting. So when all these stocks go up, NASDAQ's going to keep going. So And as our world just keeps evolving, we become more and more technology driven. And so if anything, I would be probably for longer haul, you'll probably get more moves and bigger percentage gains just trading the Nasdaq than you will with the S&P 500, just because they kind of keep putting the best of breed and the weighting higher and higher. So I hope this video helps. Let me know what you guys are investing in. Just drop down in the comments your time frames of how long you like to buy stuff for and all that. But as always, thank you for watching, and until next time, we'll talk to you soon.